Well, for more on the widening debt crisis in Europe, with us is Gary Jenkins, Head of Credit Research at Evolution Securities. Gary, we're just saying that actually the situation is not getting any better. Is it worse than it was just 2-3 months ago? Because the contagion is spreading, so I guess the more headlines there are, the more countries are at risk.
It's gradually getting worse, but then I think that's what we were expecting, because the EU's never really grasped the nettles of this crisis. They just keep kicking the can down the road, and now we have a situation where Italy is very much in the spotlight, and that's a real concern because they've got the most debt outstanding of any European sovereign.
So effectively, does it mean that actually the EU politicians have lost control of the situation?
I don't think they've ever really had control. I mean, I think they've always been reactive. They've never really been proactive.
Yeah. But so what do they do now? I mean, I understand, they've never had control. I guess the problem is the more and more the problem becomes bigger, the less and less they have things that they can do.
Yeah, that's right. And the danger is that with Italian yields on the rise, that there's going to be a situation where they totally lose control. Now, I think there's only really one thing they can do which will stop the bleeding, and that's to actually have some kind of fiscal union, to have common European bond issuance and stop issuance from any European sovereign.
But Gary, that's not going to happen overnight. What happens to Spain, Italy and especially Greece?
But at some stage it might happen overnight, because it might be a classic weekend meeting, because they've got no choice. If Italian bond yields go above 7%, then that's it, it's game over. So I think actually it is something that would have to happen pretty much overnight, and it could happen in conjunction with Greece defaulting and then using an orderly default mechanism to deal with Greece and saying, fine, that's Greece, it's different, but for the rest of the EU, we have to protect it.
All right, but for these common bonds, the ECB is against it, and I don't see Germany signing up to this.
Oh, politically it's completely unpalatable. The ECB is against it, but then everything the ECB's been against has happened eventually anyway. And the main problem is for the politicians to actually turn around and convince voters of this.
Which is near impossible.
Impossible, but then you probably end up not actually asking them to vote on it. You just have to do it. You don't have any choice. At the end of the day, what would you rather have? Voters upset? Would you rather have the whole economic system of the Western world collapse?
I don't know, if you're a politician, maybe you want to keep your voters sweet.
You want to keep them sweet, but you also want to keep food on the shelves, etc.
But Gary, in terms of what is this really a possibility? I mean, I understand what you're saying, but I'm just really not seeing it happen. Maybe I'm a skeptic, or and if it doesn't happen, are we going to see countries defaulting one after the other?
It's the last thing that will happen. Okay, it will only happen if they're kind of dragged kicking and screaming towards it, if every other alternative has been exhausted. But the moment when you look at it, all you can really see is the Greece situation. They can't sort out, there's too much debt. There has to be some kind of default for Greece. There has to be some kind of write-off of bonds. And we think that to get them down to any kind of decent level would be a write-off of at least 65%. As soon as you do
65%?
At least, yeah. So as soon as you do that, you have the bond market saying, well, what's Portugal really worth? What's Irish bonds really worth? They'd have huge marks down. And then Spain, then Italy. And if they can't be funded, well, then what happens then?
But so what happens to at least this rollover? I mean, we don't even at this point know exactly what private investors will do in all of this and whether this will be agreed on. Is this the first step, or do we need to really cut off a right arm and say, right, we need to stop all of this nonsense and focus straight on issuing bonds for the whole euro region?
Well, I think the thing is that Greece is a done deal. The market would have no surprise if Greece were to actually go through an orderly default. That's kind of accepted. The problem is, if you do that, you have to wrap your arms around the others, and the only way you really do that is common European bond issuance, some kind of fiscal union on the same day you announce that Greece is defaulting. So I think that's actually the way you could do it. As I say, it's unpalatable to voters, but it's the only way to stop the bleeding.
Do you believe governments are working on this at the moment, or again, it's a hypothesis that is just too difficult to contemplate, that they haven't really thought about it or they haven't spoken about it yet?
I would hope they've at least thought about it, because everything they've tried so far hasn't worked. And the situation, as you said earlier, is getting a lot worse. So I hope they've at least thought about it. It's not something that they'd want to talk about publicly, because it is the very last measure. But I just don't see what else is going to happen. I think we're gradually just going to get there anyway.
Yeah, Gary, thank you so much. Gary Jenkins there.